The World Bank is urging Kenya to offer more support to its informal sector so as to achieve inclusive growth of its economy. CNBC Africa's Wendo reports.
Kenya's economy has been experiencing rapid economic growth since 2006, joining the celebrated rank of a lower middle-income country. According to a report by the World Bank, this growth has not been inclusive, wedging a gap between the rich and the poor even further.
Growth is important, but we need to sustain it, and of course, inclusivity, which has been mentioned. We have to make sure that that 10% is shared by many Kenyans as much as possible, and the only way to share is to have growth with employment. Growth without employment, growth without jobs is not inclusive. Growth that is not investing on human capital, health, education, social protection is not inclusive. So we are cognizant of that.
When you're having a lot of economic activity, but you don't have government policy that necessarily specifically makes efforts for inclusion, what happens is that there's a dual economy that emerges. So part of the economy is very wealthy and very rich, but also a great part of the economy is very poor. And because governments such as Kenya don't have a good social security nets and social security programs, what happens is that it's easy for people to fall into poverty, and there's no net that can help them get by and sort of live a reasonable standard of living and a good quality of life.
In the recent past, Kenya's economic growth has been pegged on investments in infrastructure projects. However, experts at the World Bank say that long-term growth will be driven by productivity in the informal sector due to its ability to create jobs.
Most of these jobs have been created in the least productive sectors of the economy. So over 90% of these jobs are created in low-end segments of trade, hospitality, Juakali, etc. The real gains to the economy will come from improving productivity in the informality sector. So it's not about shunning informality, it's not about forcibly converting informal to formal. It's really figuring out practical, pragmatic ways on how do you improve productivity in an increasingly fragmented, low productive part of the economy that creates over 90% of these jobs.
I think what government should do, it should offer a tax holiday the way it does to a lot of foreign investors that come in. Give the informal sector, just say, if you formalize, we won't tax you for the first 5 years. Yeah, we'll help you set up. You'll get access to government programs that target small businesses. I also think government should be a bit more aggressive in financing the needs of the informal sector and the different businesses that are there. I think government should have a financing strategy for that.
The World Bank report further highlights agriculture as one of the sectors with the potential to reduce poverty. The sector contributes about 25% to Kenya's GDP, but has lately stagnated, paving way for services to rise as the new giants of the economy.
And just because agriculture and manufacturing have been giants of the past doesn't mean they have to be giants of the future. And in fact, one finding is that services have emerged as the star performer. As you mentioned, they're over half of the economy. Over 50% of the GDP comes through services. And services will continue to grow regardless of what happens in manufacturing and agriculture. In fact, it's very interesting because Kenya shows signs of a dualistic economy where services, in particular modern services, are really pushing up the economy, driving growth, whereas agriculture and manufacturing have remained stagnant.
One of the reasons why the lack of inclusivity is emerging is because when you look at agriculture, it's one of the largest employers in Kenya, but it's not very productive, and people don't make very much money from agriculture because of the methods they use for agriculture. They don't have access to financing, etc. So you have a lot of people trapped in terms of labor, trapped in agriculture, which is not productive at all, with very low levels of productivity. And so that drives that lack of inclusiveness, because agriculture should act as a catalyst for increasing incomes and improving quality of life, etc. But right now in Kenya, that's not happening. A lot of people, particularly in rural areas, who use very, very basic agricultural methods and tools, get stuck in this sort of poverty gap that's related to agriculture.
We really need to make agriculture commercial and business and to attract the youth into this sector. A lot of people say that the average age of a farmer in Kenya is about 60 years. I think that is really, really a challenge. So we need to get the youth into this sector. And of course, to get the youth, you need innovation.
Going forward, experts at the World Bank expect innovation across sectors of the economy to play a crucial role in building sustainable and inclusive growth for Kenya.
The real issue that I think is the core concern is that they just can't access it. If you don't make that information available in an SMS format where someone with a very basic phone can access it, then they're just not going to access that information. So I think in terms of innovation, we need to make it pro-poor. People don't have smartphones to go online to look at data. So I think that should really be the thrust in terms of ICT and innovation.
The last big innovation that came out of Kenya was M-Pesa. Nothing big since then. So even though we like saying that Kenya is a hotbed of innovation, the facts and the evidence points us elsewhere.